Good morning and welcome to today's webcast, AEOI and 1042S reporting in 2020. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams, Erin Fennimore, Director, and Jill Dymtrow, Director. And with that, I will turn it over to Erin to get us started.
Hi, so actually this is Jill. So we'll go over the agenda and then I'll turn it over to Erin for the background. So thank you guys so much for joining us today. There's just always kind of continuing updates in this area. 1042S reporting, FATCA reporting, and even CRS reporting aren't particularly new any longer, but there are always updates and tweaks since FATCA and CRS are still somewhat new, and everybody's trying to adjust on the industry end in terms of facilitating this reporting, and on the government end in terms of facilitating collection and tweaking data and requirements and things like that. So we always like to do kind of an update for annual reporting requirements. And today we'll go over some different updates that are going to happen with 1042S reporting for this year, some deadlines and changes for AEOI reporting. AEOI reporting will include CRS and FATCA. And then we'll also talk about the lag methods update. So initially, we'll have Erin cover just general background on 1042S, FATCA, and CRS reporting, because I know sometimes when you're kind of in the thick of hearing different things about, rules that apply to each of these regimes, it's really helpful to understand which of these regimes you're required to participate in as a withholding agent. And exactly what you should be doing for each. So again, thanks for joining. I know CPE is kind of hard to come by these days because we don't have a whole lot of live conferences that we're going to. So we really do appreciate your participation. With that, I will turn it over to Erin to give some kind of background and context to each of these regimes.
Thanks, Jill. Hi, everyone. Good morning. Thanks for joining. As Jill mentioned, we always like to start out these webinars just taking a step back and going over at a very high level, what are the basics? You know, why would I have to 1042-S report? What is FATCA reporting and what is CRS reporting? I know if it's, past that time where you really have to dive into the reporting and the compliance, sometimes we forget just the basics. So I'm going to go through one by one. First, we're going to start out with, kind of the starting point for 1042-S reporting. Why would you ever have to deal with 1042-S reporting? And it's because you are making U.S. source payments to non-U.S. persons. So at the very high level, Chapter 3, that's your 1441 regs, it's taxation of non-U.S. persons. So as a U.S. company, as the withholding agent, you're making payments to non-U.S. persons. So in this case, our example is to, a Brazilian person. And I make a $70, I owe them $100. How much do they ultimately get? They're getting $70 because you have required withholding because Brazil doesn't have that treaty. So $30 would go to the IRS, $70 would go to, the payment recipient. You need to make that withholding with the IRS. You're not done there. And then when, March or depending if you extend, April rolls around, that's when you're issuing that 1042-S. And in the fund world, you're not only issuing 1042-S's, but you're issuing K-1s. And it can sometimes get confusing because 1042-S reporting is pretty narrow. It's that U.S. source income, whereas K-1 reporting is definitely not narrow. So they don't always mirror or reconcile, and that can cause a lot of confusion, not only on the preparation side, but on the recipient side. Why don't they mirror one another? The withholding may not match, and so I'm sure you've gotten questions from your investors about the various information in the various forms. Just some basics. Generally there are no exceptions to 1042-S reporting. If you're doing both 1099, which is payments to U.S. persons, and the corresponding information returns, there are a lot of exceptions. Whereas with 1042-S reporting, there's only one very narrow exception, and it's for bank deposit interest. So, you don't generally have withholding requirements on bank deposit interest, and you don't have reporting if it's under $10. And then if it's over $10, there's all these rules, looking at the jurisdiction of the payee, so it can get complicated. So that is Chapter 3. Now we're going to move to FATCA. Everyone hears FATCA and they wonder, what is that? Now, there is a component of FATCA with, your 1042-S reporting. You have to designate that withholding either under Chapter 3 or Chapter 4, but that's not FATCA reporting. FATCA reporting is actually the compliance and the corresponding withholding under the intergovernmental agreements. So various countries have entered into intergovernmental agreements with the United States. They take different models, which we're going to go over in a little bit more detail in a bit. You're either a Model 1 jurisdiction or a Model 2 jurisdiction. While not everyone has entered into these agreements with the United States, it is so widespread now, I honestly can't cite off the top of my head what country is not in a participating agreement. And so what happens is that as a foreign financial institution, you have that intergovernmental agreement, and by entering into that, you say, I am a foreign financial institution. I recognize that I have certain compliance obligation, which means I have to look at the profile of my financial account holders, and I have to report certain financial accounts. At the very basis, really the goal of FATCA reporting under the IGAs is for foreign financial institutions to tell the U.S. when they have U.S. account holders. That's what's being looked at. And so a UK FI, it may have a UK corp. Well, if it just stops, it's a UK corp and it happens to be a financial institution, well, the UK doesn't want to know about its own residents. They have their own tax filing where they can identify, their filing obligations. What the UK FI is really looking for is when that UK corp is actually a passive entity and it has US owners. And so that UK FI will say, hey, you know, HMRC, we have an account that's a foreign passive entity with US owners, and then the UK government then exchanges it back with the IRS. So ultimately the IRS is just looking for all those US people that are potentially hiding or not disclosing income. Now the other way this can happen is a much more clear example. You just have a US account holder. So, you know, you have someone that comes into your UK fund and they provide you a W-9. Well, at the end of the year, you're going to report most of the time. You know, there are certain exemptions under FATCA FATCA reporting, where you don't have to report a U.S. person, but most of the time they're considered specified account holders. You know, they're, from my experience, a lot of times they're individuals, you know, they're LLCs, they're trusts. You have to disclose those to the local government, and they in turn exchange it with the IRS. Where I found that FATCA reporting and just the whole concept behind it was so confusing at first is everything has been payment-based before. You know, when you're looking at 1099, when you're looking at, you know, K1 even, 1042S, there's some sort of allocation or payment of income. FATCA and CRS are completely different because it's just having an open financial account. So there doesn't have to be any activity in the account. It's really the type and the classification of the account holder and whether it's active or inactive that is your kind of impetus for reporting. So I know I just mentioned CRS. A few years ago, I feel like my attendees would have no idea what CRS was. It's been in existence for more than a handful of years now. It is the common reporting standard, and just like IGA reporting, it's really a documentation and a reporting regime. So after FATCA was established, basically the world said, wait a minute, IRS, we're telling you everything. We're disclosing, you have all these requirements on us. We have these new compliance obligations. We want to know this information. We want to know where our residents are putting their money. What if they're hiding their money? So this is really the global response to FATCA. And what it is it's a worldwide exchange of financial information between participating countries. And very similar to, you know, the discussion of entering into an IGA, you have to become a participating country. And in the beginning, you know, it was a handful. Now it's over, it's well over 100 countries. And there are more adopting every single year, signing up to be participating. And at the very basic core, it applies to foreign financial institutions, just like FATCA. And it is looking at the tax residence of each account holder. And depending on that tax residence and the classification, you then have to report those account holders to your local jurisdiction, which is then shared to their local jurisdiction. So for instance, you know, you have your Cayman-based fund, and you have 7 LPs that are all domiciled in the UK. You're going to report all of those Cayman UK LPs, individuals, to the Cayman government, and they're going to share that with the UK government. So that's kind of what I just illustrated. You have your UKFI, individual account holders in Italy. You report the Italian individual, and they share that with the Italian government. Again, it's not payment-based, it's active financial account-based. The source of the income is also not relevant in both IGA and CRS reporting, which is a totally different concept than 1042S reporting. So the analysis and, you know, the population, it's all different, and it can get extremely confusing. And we have our first polling question.
All right. Our first polling question today, if I issue a Form K1 to a non-U.S. partner, do I still have to issue a Form 1042S? and your options are A, yes, or B, no. I'll give you a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and click Submit. We'll give everyone a couple more seconds here. Let's go ahead and take a look at the results. Back to you.
So in drafting these questions, I always think they're so clear-cut, and then I actually ask them, and I'm like, actually, there should have probably been a C option that says it depends. So if you are issuing a Form K-1 to a non-U.S. partner and they have either been paid or they have been allocated U.S. source income, so let's say they were allocated U.S. source interest for the year, yes, you also have to issue them a Form 1042-S. So the analysis is, on that Form K-1, is there U.S. source income that has either been paid during the year or has simply been allocated to that foreign partner? And if the answer is yes, then you have to also issue a Form 1042-S along with the Form K-1. So I will make that question clear next time we draft these slides. So we're going to move on now to 2020 updates for 1042-S reporting. This is never a static regime. It is always changing. And we have quite a few updates for 2020, and I'm going to turn it over to Jill for those updates.
Thanks, Erin. So if you look at the 2020 Form 1042-S, it doesn't really look any different from what we were dealing with in 2019. However, there are a few changes in kind of application of the rules of what needs to go into each of those boxes. And also, kind of the major update we'll talk today in terms of audit efforts for these forms. So first of all, in terms of data elements, there were some extensions granted by the IRS through the end of 2019 for FTINs in cases where FTINs are required, financial institution paying a direct a foreign investor, and date of birth being required for individual and foreign investors. So those have been extended last year through 2019. So any allowance for financial institutions not to collect those data elements from certain account holders has now expired on those two data elements. So I don't actually have a slide about this, but one thing that we should recommend is that for those foreign account holders or investors that you're looking at that have not yet provided you with an FTIN or a date of birth, now is a really good time to go through your records, identify who any of those payees may be, and make sure you get that information. Forms won't be valid after December 31st, 2019, absent those data elements in a lot of cases. So their absence on your 2020 Form 1042-S reporting will demonstrate a lack of a valid form. So if you've reduced withholding under 30% and you don't have that FTIN or date of birth, you really need to make sure that you're collecting that so you can put them on your Form 1042-S for 2020. The other main update is this Audit Campaign 817, an IRS focus on 1042 filings. You might have heard about this before, so it might not seem like it's, a recent update. Last year at an information reporting and withholding conference in New York, the IRS spoke and expressed with a lot of enthusiasm this new audit campaign that they were running, and that there would be a lot of letters going out and reviews being done starting on 2017 Forms 1042 and 1042-S were filed, and identifying filers who haven't filed the forms that they need to. So as we went through the fall, we expected to see a lot of clients coming to us with these notices. they would have identified errors on the face of the form, Forms 1042 that don't reconcile with Forms 1042S, and just basic non-filers. And to be honest, we saw not a lot. We didn't see nearly as many as we expected. And speaking with my colleagues at different firms, they had the same experience. So I saw a couple of withholding agents that had made, large filings and, prior to 2017. There were filings after 2017. 2017 was missing. They got a notice. May or may not have been, part of this drive. But at the end of the day, we just didn't see quite as much as we expected. So we were wondering, what could have happened? Anything could have happened. And then recently, last month, the Treasury Inspector General for Tax Administration released this report that they had done, kind of auditing what this audit campaign would do with the IRS. So just to let you know how that went a bit, the title of their report is "Continued Efforts Are Needed to Address Billions of Dollars in Reporting and Payment Discrepancies Relating to Tax Withheld from Foreign Persons." So in their review of, this audit campaign, they had a lot of findings basically demonstrating that it's kind of the Wild West. There's, Forms 1042 that are submitted that reclaim tax that there are no records of deposits for, or a lot of discrepancies between 1042S and 1042 filings, a lot of 1042S filings that don't substantiate reduced rates of withholding, and they made actually 12 recommendations out of that review for the IRS in terms of moving forward with this audit campaign. The IRS adopted some of them, disagreed with some of the recommendations, but in any case, I think the message from this will be that the IRS is now well aware, and it's documented by the Inspector General, that there's just a lot of non-compliance with 1042 and 1042S filing, and there should be focused attention on that in the future. These forms are evidence, just a ton of information about a withholding agent's due diligence procedures, the information they're collecting. The IRS is getting so much information on these forms. A lot of times when that happens, we wonder how they can possibly process all of that information. If you're an auditor sitting down at an audit target and you're looking through this 1042S, it does give you a lot of information about what was collected and a lot to go on. However, if you're processing these on hundreds of thousands of these systematically, it might be more difficult to really determine what each of those data elements mean. So the IRS with this audit campaign did get a lot of automation of the review of these forms. So it's not just that you might be in trouble for not reporting correct information if you just file these forms incorrectly versus, having an auditor sit down and really pour through all that data. So as the slide says here, there's 3 categories of interest: errors on the face of the 1042. One of the major findings of that report was, a lot of reclaim of tax withheld, that there was no evidence of that tax having been deposited. The Form 1042 doesn't reconcile with Forms 1042S. In fact, it appeared as though there were a lot of Forms 1042 filed by withholding agents that didn't have any Forms 1042S filed along with them, which could happen in certain situations if you made a deposit and then at the end of the year you decided, oh, well, we anticipated that distribution with dividends. We deposited money. At the end of the year, we determined there wasn't E&P to cover any of that, so it wasn't a dividend, and now we're, reclaiming that because it wasn't taxable. So there are situations that could happen, but it seems to be happening far more often than would be kind of legitimate. And then identifying those non-filers. So errors on the face of the form that should be something that the IRS can kind of automatically detect based on new automation that they've set up to review these filings would be incorrect or missing Chapter 3 and Chapter 4 status codes. We saw initially a lot of people reporting payees as non-participating FFIs. So an NPFFI would be subject to 30% FATCA withholding for many types of payments, but that was like the first box that you could check on the Form W-8 Benny. So some people still have that kind of old data in their system, and making sure that, you know, you don't have that kind of thing. Reporting to a partnership as a direct owner absent any treaty claims. So, you know, there's a lot that you can figure out between those codes that are there or the absence of those codes, and the due diligence process and the determination process of you know, what rate of withholding gets applied that the IRS can use to determine things were done correctly or not. Tax liability schedule not being filled out correctly. So, you know, we always recommend making sure you enter zeros for each month that has no tax liability. The IRS won't view that as an omission. They'll understand that, you know, the liability should have been zero, and being really careful to make sure that that's filled out correctly. It matches receipts of payments that you've made, and that we always also recommend, but prior to filing your 1042, you get a report of your 1042 account from the IRS showing when they have credited the deposits you've made, and making sure that agrees with what you've actually done. A lot of times that's off, and you want to get that corrected before you're replying to a notice of late deposit from your 1042 filing. Also making sure, you know, Section 2 in the Form 1042 is completed, the reconciliations between Chapter 3 and Chapter 4. For the first year that section was included on the 1042, it had the word optional next to it. That was removed after the first year, but it seems as though a lot of filers have continued to apply that optional, and there was a lot of that done. I've seen a lot of forms like that where there was no follow-up with the IRS. So again, you know, people do follow rules that are enforced rather than rules that are written, and that seems to be what we've seen with the 1042s. Main areas we've seen with reconciliation of the 1042 and 1042S that they would be looking for: the number of forms 1042F filed. This is the big one that the IRS, or that the Treasury Inspector General had focused on, withholding credit on the forms 1042S versus the withholding and deposits reported on the 1042, along with, you know, what you've got credit for in your 1042 account. So making sure that there's an amount deposited, either you're allocating that between payees on their forms 1042S, or you're reclaiming it or applying it to the next year's payment. And the amount of withholding that you're taking credit for on the form 1042S does reconcile with those, or on your 1042 does reconcile with those forms 1042S and the amount you've deposited. Gross income paid is another item of focus, making sure that the gross income paid listed on all of the forms 1042S reconciles with that summary amount on the 1042. All right, and we've got our next poll question, so I will turn it over to Emily for that.
Thank you. Our second polling question: I've already filed a Form 1042S in 2019, but I did not file a Form 1042. However, I did not receive a notice from the IRS. Do I have to file the Form 1042? And your options are A, no, just skip it, or B, yes, you will still need to file the Form 1042. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. All right, let's go ahead and take a look at the results. Back to you.
All right, so yes, you still need to file the Form 1042. And this was one of the things, I actually just got a call about this yesterday. The deadlines for 1042S and 1042 reporting are a bit kind of wonky. Like, if you're filing prior to the deadline, you have that March 15th filing deadline for both the Form 1042 and the Forms 1042S. If you apply for an extension, then you have 6 months until September to file your 1042, but you only have until April to file your Form 1042S. So we do see a lot of confusion and like, oh wait, you know, why did I have to file the 1042S so long ago if I'm just getting together my 1042 details now? There's a lot of kind of speculation about whether or not 1042S's will be eligible for automatic extensions in the future. Also, we're seeing, I'll address in the lag method slide, some additional time for partnerships, U.S. partnerships with non-U.S. partners to file their Forms 1042S as well, which is extremely helpful. But yeah, this is again, you know, a moving target, and if you do file, if you have an obligation to file any Forms 1042S, you then automatically have an obligation to file the 1042, and we do think this is something the IRS will be scrutinizing a bit closer, so you should do that. And if you filed for an extension for your 2019 1042, you have until September 15th to get on that. Okay, and now I'm going to turn it over to Erin for deadlines and changes for AEOI reporting.
Thanks, Jill.
And Erin.
All right, so there have been a lot of changes with CRS and FATCA reporting this year. The biggest change is that it's an ever-moving target as to the deadline. With COVID, there have been a series of extensions, and you know, the most common jurisdiction that we have clients filing for is the Cayman Islands, and that has been extended, I think, over 3 times now, and is all the way out until November. The other one we see is Canada, and that's in September, but every single jurisdiction is a different filing deadline. So just make sure, you know, if you have funds that are domiciled outside of the U.S., that you're, and even the U.S., it's a very narrow population of reporting for that, which we'll go through. Just make sure that, you know, you're in constant contact with your service provider, or if you do it internally, look at the due date because they are changing constantly. So let's go on to our first slide. As I said, so first we're going to look at what obligations a U.S. entity has in terms of FATCA reporting. So FATCA reporting for a U.S. entity is done via an 8966. It's an IRS form, and it's looking for, you know, a very specific type of account, which is just not very common from my experience. It happens a lot of times with foreign GPs. So a U.S. fund, a U.S. domiciled fund, has an obligation to file an 8966 whenever they receive a WA-BEN-E, or, you know, internally they prepare a WA-BEN-E, where the FATCA classification is passive NFFE with U.S. owners. The fact that they have, it is a foreign entity that has U.S. owners within a U.S. fund, you have to actually report that passive entity because they want to know the information for the U.S. owners. Again, I just don't see it happen very often, especially with, you know, our Silicon Valley funds. When I do see it happen, it's for GPs. So that was extended until July 15th, so that deadline has passed. But if you haven't done it, you know, obviously make sure that you're in compliance. And we haven't had any abatement requests responded to, but I mean, overwhelmingly, the reason for late filings this year has been because of office closings and COVID. So we would expect some sort of leniency and understanding from the IRS. And so that also the FATCA information exchange. So because of COVID, the IRS extended from September 1st for Model 1 IGA jurisdictions to exchange data with the IRS to December 31st. So this just allows more flexibility for all of those Model 1 governments to also extend because it means the U.S. isn't looking for the information from that foreign government until December, the end of this year. So it means that that foreign government doesn't actually have to collect it from, you know, entities that are formed in that jurisdiction. And this is why we've seen so many extensions, like the Cayman Islands is a perfect example. There is something coming up for the EIDS testing. So EIDS is not only used with 8966, but the Model 2, because you're reporting directly to the IRS. Model 1 is just taking a step back. I don't think I explained this, but with FATCA reporting, you have Model 1 jurisdictions and Model 2 jurisdictions. So Model 1 jurisdictions, they report to their local government. So Cayman reports to Cayman. Cayman exchanges with the IRS. Model 2, you exchange the information directly with the IRS. So that Form 8966, you know, it's e-filing just as very similar to how we would e-file 1099s or 1042Ss. Obviously, the system is different, but the concept behind it is the same. And so that testing platform is going to open August 3rd through September 11th. And test session will be open to users that have completed that enrollment. You have to enroll into this EIDS testing program by Thursday, July 30th. The corresponding FATCA certification that is due has been extended from July 1st to December 15th. So, I mean, the overall message is everything has been extended, but just because it's been extended, I mean, I fall into this category. I think, oh, I've got enough time, and then all of a sudden 2 months has gone by, and I realize I'm up against a deadline. So just make sure you're aware of these deadlines and you're planning accordingly. Cayman Islands has had the biggest update. Not only do we have this extension because of COVID and everything that's going on, but the Cayman portal has actually completely changed. So they shut down the Cayman portal, and they have a new portal that hasn't been launched. They're going to have FAQs, you know, enhanced capabilities such as bulk upload. We have a service provider that we use, and, you know, we haven't even been able to get into the system, see what it's like. So I wish I could give more information. You know, I don't know if we're going to have to re-register, set up, you know, new user platforms, authorizations. If you have, you know, third parties doing the filings on your behalf, you obviously have to authorize them. There's a lot of unknowns at the Cayman Islands. So, you know, as soon as we know anything, I am sure we'll release an alert letting people know, you know, now is the time. You can start utilizing the new portal. Make sure you contact your service provider to make sure they're aware and everyone's, you know, ready to go for this November 16th filing. We're going to shift to, you know, CRS. So the biggest ongoing issue with CRS is that every single year there's new countries that are participating. So for 2020, we have 6 new jurisdictions: Albania, Ecuador, Kazakhstan, the Maldives, Oman, and Peru. So if you have account holders, which I have clients that have account holders, I'm just going to take Peru for example. They have direct account holders and they have controlling persons that are domiciled in Peru. Well, until this year's reporting, those people have never been in scope. So, you know, they've been classified as non-reporting, they've been put off to the side, they've never been pulled into the reporting file. But this year, we have to take a look at all of those pre-existing accounts to see if we have any direct or controlling persons in these 6 countries. And we also have to look at our new accounts that have been onboarded, or, you know, presumably they would have already been onboarded for your 2019 population, but you have to look at your population continuously. So if you have a process where you're doing everything real time, you know, you're admitting new partners into the fund, you make sure they're classified, you know if they're reportable, you're set, you're ready to go. It's just a data dump at reporting time. There's a little bit of a hiccup with CRS because you have to look at your historical population every single year and just make sure you don't need to reclassify someone as non-reportable to reportable. And it's just an inevitable due diligence step that you have to do. So just be aware of that. It's also a great chance to realize I have a couple holes. I don't know where this person is a tax resident. Reach out, get that certification, a CRS self-certification. Make sure your population is clean and you know who you actually have to report. It's also important. So similar to that 1042S campaign that Jill discussed, at the time that they discussed that 817 audit campaign, they also discussed the audit campaign for 925. 925 is focused on 8966 FATCA filings. So, you know, you're focusing on your Model 2 and U.S. jurisdictions, and they're looking, have there been filings? Have there been 8966 filings? I mean, we don't know the exact details of how these bots are pulling the data, but just like off the top of my head, well, if you're filing as a U.S. filer, if you're filing 1042Ss, all they would need to do is just pull that FATCA code, which is 19, I believe, which indicates passive foreign entities with U.S. owners, and then they just need to butt it up against your 8966. If you haven't been filing those 8966, like you're a perfect candidate for receiving that letter saying, you know, what's going on? We see that you should, more likely than not, should have been filing 8966. You know, let us know. And so again, we don't know exactly what information, but we were told they've identified a population of financial institutions that they believe should have been doing these 8966 filings but have not. And while this initial target audience will be USFIs, the natural progression will be that they then open it up to Model 1. And I mean, when they open it up to Model 1 FIs, that's just like Pandora's box. The significant bulk of countries with an IGA are Model 1 IGAs. And so, you know, that's going to be all your Cayman funds to make sure you've been doing your Cayman filings. So just be aware that the time is coming. Audits will happen, you know, while CRS and FATCA were regimes in their infancy a few years ago, you know, I don't necessarily know that the IRS views it that they're still in their infancy, and compliance and reporting is expected. So to get your house in order now is the best. All right, we have another polling question.
Okay, our third polling question. A Cayman Islands partnership has 3 investors domiciled in Oman. Historically, CRS reporting has not been required. Does this mean they will now require reporting, or is it only new investors domiciled in Oman? And your options are A, no, existing investors domiciled in Oman will not be in scope for reporting, or B, yes, existing investors and new investors domiciled in Oman are now in scope for CRS reporting. And for those of you that would like a copy of today's slide deck, you can download them from the folder that says slide deck and handouts to the right of the slide view. We will also be sending the slides via email after the webcast. Okay, we'll go ahead and take a look at the results. Back to you.
The answer is B, and so almost 85% got it correct. You do need to look at existing investors and new investors. And now we are going to turn to the biggest update, you know, for U.S. partnership reporting. It's confusing, it's painful, and Jill gets to discuss it.
Thanks, Erin. So I think I'm the only one that liked the lag method. A little bit sad to see it go, but I don't think that many other people are. It's funny, I've had a lot of conversations with clients who were not using the lag method. So they were doing this incorrectly in the past. So we discussed how, you know, according to the lag method, this should be done so that you don't get penalty notices. And now we're having that conversation and at the same time saying, but we're going to go back to the thing you were doing. Even though it was wrong and it generated penalty notices in the past, now it is the right thing to do. So you were just ahead of your time. So ultimately, what happened to the lag method is in 2018, at the end of 2018, the IRS issued some proposed regulations to get rid of the lag method. They still haven't been finalized. At the very last minute for 2018 reporting, the IRS said you could use those. I don't know of a lot of people who did, because literally it was in March when that announcement came out. For 2019 reporting, we actually have gotten a lot of people off the lag method this year. So that was great. In 2020, the instructions do indicate that you can't use the lag method, but sometimes, in some places referring to it, it says kind of must, in other places may. So we will assume that 2020 we will get hopefully a bit more guidance on this, but in any case, we will move away from lag method reporting, and we will do it the new way. So what was lag method? Lag method aligns 1042-S reporting with the tax liability date, as opposed to the K-1 reporting of timing for reporting that income. So ultimately what happens for a U.S. partnership, they have a special rule for deposit requirements. You either have to make a deposit when you allocate or when you distribute U.S. source FATCA income to your investors. But if you don't make any distributions of U.S. source FATCA income, the deposit liability date is when you issue the K-1s, the earlier of the K-1 issuance date or the K-1 due date. So ultimately, the K-1s don't get issued in the year the income is, collected by the partnership. They get issued the following year. So for 2019 income, we will essentially, be issuing the K-1s now and say, oh, okay, this partner made $1,000 in dividends, and that liability would go on would have, under the lag method, gone on the 2020 Form 1042 in the July 22nd or the July 30th box, in that first section where you list your liability for dates for the year. That was great in certain ways. It allowed filers to properly align their tax liability on the 1042. They could coordinate the 1042-S reporting and have plenty of time to identify those reportable amounts. Because, if you're making deposit right now, that 1042-S and the 1042 reporting wouldn't be due for it until next year. But it was really creating problems for investors, foreign investors who were filing U.S. tax returns to reclaim some of that tax withheld. So they'd have a K-1 from 2019, a 1042-S for 2020, and which would be the proper receipt for tax for their U.S. tax return. It was causing a lot of complications on filing an 1040NR or 1120F for those foreign investors. So, and again, like I said earlier, a lot of people were just not recording this correctly on the Forms 1042, and it was generating just a massive amount of penalty notices. Some partnerships were just paying the penalties because they were small enough, they just wanted it to go away. But others would do the refiling, which would cause a lot of problems then for their partners as well. So what we're doing now is getting off this lag method. And what that means is that partnerships off the lag method that have allocated U.S. source FATCA income to foreign partners reported on Forms K-1 that haven't been distributed will be allowed a 9/15 extension for 1042-S and 1042 reporting, as long as the K-1s are issued after March 15th. So what happens is, so say for 2019, you're issuing K-1s now. Now you would see the amount of allocated income for those partners. The withholding rules have not been changed. So the withholding rules, if you're distributing income in 2019, you still have to report that as, 2019 income. You still have to deposit that within, days of the distribution. And then now you've got 2019 income that's getting reported on the K-1. So now you'll have your liability date for that not distributed but allocated income, because you've got the K-1s being issued. And now you have until September 15th to go ahead and issue those Forms 1042-F, including all of the distributed and allocated 2019 income on your 2019 Forms 1042-F and 1042. There's different boxes and indicators you'll need to check to let the IRS know that this is happening. You may expect to receive a late notice saying, hey, you issued these forms late, and the IRS is giving you ways that they think will help avoid that, and then also they've explained that what you should explain in your penalty abatement request. So surely there are still system work being done to adjust that penalty notice process, but you might still get a penalty notice if you've done that. So the lag method was still allowed for 2019 reporting. Again, like I said, we had some people do lag method reporting for 2019, but we don't expect that will be an option for 2020. The mechanics of the reporting, you will have the 1042 showing the liability for allocated but undistributed income on that 12/31 date of the preceding year. So say you have, $10,000 of withholding tax liability, like tomorrow, because that's when you're issuing the Form K-1. Instead of putting that on the 2020 Form 1042 at the end of July box, you're going to put that on December 31st of the 2019 box on the 2019 1042. On the second page of the 1042, you're going to show that liability as paid during a subsequent year. There's a lot of confusion around 65B because it says, show me the amount of tax that was paid after the year of withholding. You read the instructions, it's only under these certain circumstances in which you were allowed to pay the tax after the year reported. So 65B is where that amount would show up that aligns with the 12/31 liability schedule. And then the Forms 1042-F would indicate that withholding occurred in a subsequent year with respect to a partnership interest. So there's this box 7C, actually, down at the bottom left corner here, and that's where you indicate that this was a partnership distribution or allocation that wasn't distributed prior to the end of the calendar year. In the 2019 instructions, there was some very vague information around this box 7C. Luckily, the 2020 instructions clarified a lot of that, so we've been using that as guidance. But any of these, partnership Forms 1042-F, Forms 1042-F issued by U.S. partnerships to non-U.S. partners, showing allocated income, even if there wasn't withholding demonstrated on the 1042-F, you would mark this box in 7C to indicate that it's allocated but not distributed income, and this should get you the 9/15 deadline to file this form, as opposed to getting penalized for issuing a form after 4/15. So for an example, we'll run through this quickly because we are getting close to the top of the hour. A U.S. partnership received $100,000 of U.S. source dividend income at the partnership level in calendar year 2019. A foreign partner's share is $10,000. So in November of 2019, a portion of this is distributed and subject to withholding at 30%. There's a balance that remains undistributed, and the K-1 is due September of the following year. So essentially, under the lag method, you would report the $6,000 of distribution in your 2019 filings of your 1042 and 1042-F. The unallocated portion of the $4,000 would be triggered on the 2020 1042 and 1042-F. The deposits, as I mentioned before, the deposit rules will stay the same as they always have. It's just really where you're recording this on the 1042 and 1042-F. And as I mentioned, which was creating this large problem, for your 2018 K-1 in this scenario, you'd have $10,000 worth of income, and your 2020 K-1 would show $4,000 of income. You'd have a discrepancy, or 2020 K1 in this instance would show $0 of income, but you would have a $6,000 a 1042S and a $4,000 1042S the following year. Under the new proposed lag method, you would not have reporting within a year that you didn't have any you would report all of the income as per the year that the partnership collected it to the partners on the Forms 1042S. So then your K1 reporting of $10,000 of U.S. source dividend and your 1042S reporting of $10,000 of U.S. dividend would align and would create less confusion for any U.S. tax filings that foreign partner would make. And so we have, I believe, our last polling question, and I'll turn it over to Emily to ask that.
Great, thank you. Our final polling question: a U.S. partnership with no distributions elected to only report lagged 2018 income in 2019. What does this mean for 2020 1042S reporting? And your options are A, under the updated partnership reporting method, you can simply report 2020 K1 income in 2020. 2019 income reporting is excused. B, you need to amend your 2019 Forms 1042S. Or C, your 2020 1042S reporting will include both lagged 2019 income and 2020 K1 income. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window to the right of the slide view. All right, let's go ahead and take a look at the results. Over to you.
All right, thanks, Emily. So the majority of people did get this right. So ultimately, the first year you get off lag method, it's pretty messy because you're including your prior year lagged income and your current year income both on the same 1042S, which I would recommend a notice to your partners receiving this to say why it looks quite off from the K1 they're receiving. But yeah, 2019 income is not just excused from reporting. We will, include both lagged and real-time income the first year you get off this reporting method. And then moving forward, it's just K1 income that gets reported on the 1042S, regardless of whether it was distributed or not. Okay, so I'm going to send it over to Erin for a quick wrap-up.
All right, thanks, Jill. I hope you've enjoyed and that this has been a helpful webinar. Just some takeaways. Are you prepared for all this? So, have you collected and reviewed all the Forms W8 and self-certifications? Self-cert means that you're ready for your FATCA and CRS reporting. W8 means you're way ahead of the game for next year's 1042S reporting, or maybe you haven't reported this year, and you're on the 9/15 deadline. Have you determined your reportable population, compiled all that information? Are you registered for all the local portals? Basically, are you ready? Ask yourselves those questions. And if the answer is no to any of them, then, use the time in the summer, which sometimes is a bit slower, to start preparing. And I think we have time for one question. We have a question in the queue.
All right. Yep, we can squeeze in one question here. To be clear, related to the first polling question, if the income that is being allocated is ordinary income effectively connected with a U.S. trade or business and not FTAP income, it seems that would be reported for the foreign partners on Form 8805 instead of the 1042S. Is my understanding correct?
So yes, that is correct. So 1042S reporting will only cover the U.S. source for that portion of the income that's reported on the K1. If you do have effectively connected income, ECI, then you would report that separately on the 8805. there may be even more of a gap between the income reported on the K-1 and the income reported on the 8805 plus the income reported on a 1042-S in terms of some foreign source FDAP. But in any case, that is correct. If you've got U.S. trade or business income that flows through that partnership, it does not get reported on the 1042-S. You are reporting it on the 8805 instead.
Great, thank you. And that does bring us right to the top of the hour. Thank you so much, Jill and Erin, for a great presentation today. If you asked our presenters a question and we didn't have time, we will do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.